Income Tax 2020, Schedule C, Self-Employment Tax or SE Tax. Come in, relax with Income Tax 2020. Schedule C, Self-Employment Tax or SE Tax. When thinking about a Schedule C with regards to our income tax equation, we are in essence talking about line 1, the income line. Remembering, however, that the Schedule C is going to be reported on a separate schedule, and that schedule has both income and expenses, its own basically income statement. The bottom line of it then being kind of like net income, which feeds into basically the top line of the income tax equation, which is basically the 1040 here, and then we apply out our other adjustments, which would include the above the line and below the line deductions. Now, also note that as we talk about self-employment tax, we're basically tying that to the Schedule C, but that's going to be another tax, which is going to be Social Security and Medicare, that we're going to have to be calculating, and that also has an impact on the adjustments to income as well, and could have some impacts on other areas within the tax return other than simply the Schedule C that then flows forward to line 1. So for example, here's the first page of the 1040. Remember that the Schedule C will basically be an income statement. The bottom line of the Schedule C, basically net income, flowing through to Part 1 of Schedule 1 and then to the first page of the 1040, as we can see here. We also will have self-employment tax that we'll have to calculate, which will be Social Security and Medicare. Half of that tax then is deductible, but not on the Schedule C because it results in a circle reference as we've seen in the past. Therefore, it's going to be on Schedule 1. Part 2, that's going to be half of the self-employment, Social Security, and Medicare that we get to deduct on Part 1. This is where it will lie on the first page of the 1040. And then again, we could, of course, have the effect, which would be the qualified business income deduction, could possibly be a result of having the Schedule C and could have a significant impact then on the federal income tax that would be calculated. So a lot of different effects. Then we have the Schedule C. This is obviously the main form we think of with self-employment income. If it's a normal kind of business setting, we have the income line item, the expense line items. The expenses are in essence deductions. They're deductions when we used expenses in order to help to generate revenue. And that would be, business deductions here. Bottom line then being basically the net income of the 100,000. That is what flows through to the Schedule 1, Part 1, and then to the first page of the 1040. Now, we're thinking about this net income number down below with regards now not only to the income tax that's going to flow forward, which is what we usually think of, whether we're talking about W-2 income or Schedule C income, when calculating the 1040 income, meaning we're primarily thinking about federal income tax. But when we have these business here, we also may have these Social Security and Medicare, which are basically kind of payroll taxes if we were W-2 employees, which are now self-employment taxes. So we have to add that on and think about them in conjunction with the tax return as we fill out the tax return, as opposed to when we have a W-2 employee, there's still payroll taxes involved, or basically Medicare and Social Security involved. However, that was taken care of because the IRS or the government forces the employer to take care of that, pulling the wages out of the W-2 employees for payroll taxes from them and paying their portion. And then when we report it on the tax return, it's all basically done for us because the IRS forced the employer to do all the difficult work on the reporting. We just need to report the W-2. If there is no employer, like in the case of a sole proprietorship, then we got to do that basically when we file the tax return. And note that what's different about this situation is that if you're a W-2 employee, then you, on your side, you will be paying your employee portion of Social Security and Medicare. That's what comes out of the W-2. On the employer side, they have to match that and pay it as well. When we think about this in terms of a sole proprietorship, the IRS basically sees you as both the employee and the employer. So you own your own business, you have a Schedule C business. The IRS basically sees you for self-employment tax purposes, or which is basically payroll taxes, Social Security, Medicare, as the employee and the employer, in that you're going to be paying taxes on the net income for both the employee and employer portion of basically payroll taxes, Social Security, and Medicare. So that's the general idea. And just remember that if you're talking to somebody that went from a W-2 job to somebody that now is a sole proprietorship, that can be difficult to basically understand because we're going from a situation where not only federal income taxes were taken out of our wages directly, but they also took out Social Security and Medicare. We never saw it. We never had to deal with it. We never had to write a check to the IRS for a fairly substantial amount of money. And when you're a sole proprietorship, then that is the case. And also when you do the tax return, you see this other calculation instead of just an informational kind of piece of information on the W-2. It's now something that's added to the tax burden that's actually on the tax return. And you kind of have to explain, the difference between or how the fact that a W-2 employee has Social Security and Medicare, but only the employee portion that was taken out of their wages by the employer. And now you've got both employee and employer portion of Social Security on the Schedule C. Also note this is an important factor if somebody is thinking about being either a W-2 employee or doing their own business on a Schedule C. Schedule C, you get the benefit of taking the deductions, which you can take far more advantage of oftentimes than if you are a W-2 employee, even if you purchase your own, materials. But you're subject not only to the employee portion of Social Security and Medicare, but also the employer portion. So that's a significant factor. Now, as we go forward with some more details, note that the Schedule SE is out in preliminary form, and we will take a look at our examples from it, but the 2020 instructions are not out yet. Therefore, this information that we have here is coming from the 2019 instructions, which we have then modified to the best of our ability at this point for 2020, but just note that this is basically coming from at least the starting point, 2019 instruction. If you have questions about a particular area, then you want to start, or you could start at looking at the instructions for Schedule SE. You could find that on the IRS website at irs.gov, and that's where you can kind of start your research. We might put a link to it as well, but again, you can find those instructions at irs.gov, and the 2020 instructions hopefully will be out shortly. So here we have it. We have the self-employment tax. Self-employment tax, or SE tax, is a Social Security and Medicare tax primarily for individuals who work for themselves. It is similar to the Social Security and Medicare taxes withheld from pay of most wage earners. So basically, you can think about this tax as payroll taxes, kind of, or the IRS trying to make equivalent the payroll taxes in an employer-employee situation if you worked for a business as with a sole proprietorship. However, they're thinking of you as basically both the employer and employee, paying both sides as the sole proprietor. Social Security coverage, Social Security benefits are available to self-employed persons just as they are to wage earners. Your payments of SE tax contributions to your coverage under the Social Security system. Social Security coverage provides you with retirement benefits, disability benefits, survivor benefits, and hospital insurance, Medicare benefits. So in other words, notice that when you're paying into Social Security and Medicare, you can think of it either as like a safety net, meaning you're paying into these programs to help people that need it at when they need it, at basically, typically, if you're talking Social Security at retirement, or more and more, they're starting to think about these programs as kind of like a federal retirement program, meaning you're kind of, you should get benefits even if you don't need them, even if you're well off possibly, you're still kind of going to get Social Security benefits because you paid into the system. And more, it seems like the Social Security system is working kind of in that way. So in other words, you're going to put money into Social Security and then you get benefits kind of like a retirement plan according to the system at retirement time. Now, I wouldn't depend on that if I could in any way, if I was putting money into Social Security, had an option for it, and I was putting it in there in order to safeguard me for retirement, I would much rather choose not to do that if I had the option and put it into my own retirement fund account, because I have absolutely no faith that Social Security will be there at retirement, because it's kind of the funding is quite skeptical at this point in time. So it's highly uncertain as to what the Social Security will look like for anybody who is contributing into it now at the time they will retire. But the idea being that if there is a program when you retire, if you put money into Social Security, then the amount of benefits that you're going to be getting is based on the amount of money that you put in. So you want to make sure that if you're putting money into the Social Security, that you're doing so in such a way that you will get a benefit. If the program is still in existence at the point in time, you might get benefits at the point in time of retirement. Okay, who must pay Social Security tax? You must pay SE or Social Security tax and file Schedule SE Form 1040 if either of the following applies. So your net earnings from self-employment, excluding church employee income, were $400 or more. Now, this came from 2019, but again, you can see it's a fairly low threshold. Even if it's increased a little bit for 2020, it's pretty low. So if you have self-employment income, if you have a Schedule C business, then you're most likely going to be paying, Social Security tax and Medicare or self-employment tax. You have church employee income of $108.28 or more. Again, this may have adjusted for inflation, but obviously it's quite low here, so you're probably going to be subject. For 2020, the self-employment tax rate is 15.3% on the first $137,700 worth of income, plus 2.9% on the net income over $137,700. So let's first think about, where does this 15.3 come from? If we were to compare this to the W-2 wages, then what does the employer usually take out of someone's W-2 wages for Social Security? Usually 6.2%. 6.2%, that would only be the employee portion. Then they would themselves pay another 6.2% out of the employer portion, that amount not coming out of the W-2. And then we're also going to be paying another 1.45% for Medicare. That comes out of the employee wages, and again, the employer matches another 1.45% out of their wages. Now, if I take that and say this is Social Security and Medicare on the employee side of things, now I'm going to take that and multiply times 2 to double it to get to the employer side of things. That's where they're getting the 15.3. So again, the IRS sees you as both the employee and employer, therefore you're paying 15.3, which is substantially higher, twice as much as what would be pulled out of the W-2 wages, given the fact that you're employee and employer. Now, note that the Social Security is going to be capped at $137,700. So that means if you earn more money over $137,700, then you stop paying part of the Social Security half, meaning the 6.2% times 2, that 12.4. You're going to stop paying it after you get to the $137,700. Why? Because after that point in time, when you're not getting any benefit according to the current program, this is basically the main reason why you would have a cap on Social Security, because you're thinking of it, again, not as like just a program for welfare for people that need the payment after they retire or whatnot at the point of distribution, but everybody should get benefits, and they're not going to get any benefits, or their benefits do not increase if they put money in over a certain threshold. So that's why they kind of cap it, or that's a justification for capping it. So you no longer pay any Social Security after that cap, which can be confusing, because if you have W-2 income and self-employment income, then you got to figure out what that cap will be. And if you have W-2 wages, then you'd like to cap it with the W-2 wages, because you're only paying the employee half at that point, and you could still hit the same cap. So that cap lends some confusion. We'll talk a little bit more about that in our example problems. Also note that the Medicare side does not go over the cap. So once you hit that $137,700 cap, the part that's Social Security, the 12.4, caps off. You no longer pay it for the amount over that $137,700. But the Medicare is more of like a welfare program. It's not like a benefit program, and therefore there is no cap on it. It's a smaller amount. That's going to be the 1.45 times 2. So the 2.9% you're going to keep on paying into even after you hit the cap. So once you get over this threshold, it gets a little bit more confusing. It's not just a flat tax at the 15.3. Then you got to break out the Social Security and Medicare. Social Security stops at the cap. Medicare keeps on going. And then Medicare could even go up a little bit if you increase past a certain threshold. That's going to be kind of the general rule. All right. Maximum earnings subject to the SE tax. Only the first $137,700 of your combined wages, tips, and net earnings in 2020 is subject to any combination of the 12.4 Social Security part of the self-employment tax. So that's going to be the cap. If you go over the $137,700, not just with the self-employment, but if you have two Schedule Cs, or if you have a W-2 job and then you do some gig work and the W-2 job already took you over the cap, then maybe you don't have to then report any self-employment tax, which would be better, because again, you're only paying half of the Social Security and whatnot on if you're a W-2 employee. They're only taking the employee portion out of your wages. Okay, and then we have all your combined wages, tips, and net earnings in 2020 are subject to any combination of the 2.9 Medicare part of the self-employment tax, Medicare tax, or Medicare part of the railroad retirement cap tax. So the 2.9, which is the 1.45 times 2 employee and employer portion of the Social Security of the self-employment tax, that doesn't have a cap. So there is no cap. It just keeps going. You keep on paying the tax no matter how high your income is. If wages and tips you receive as an employee are subject to either Social Security or the Tier 1 part of railroad retirement tax or both and total at least $137,700, do not pay the 12.4 Social Security part of the SE tax on any of your net earnings. However, you must pay the 2.9 Medicare tax on the self-employment tax on all your net earnings. So in other words, like if you had other wages, W-2 wages, for example, that were over the threshold of $137,700, then you would have paid all of your Social Security within the W-2 work, and then you don't have to be paying self-employment part, the 12.4% on your sole proprietor business, which again would be beneficial, meaning you're getting the benefit of paying it or hitting the cap through your W-2 wages where you only have to pay the employee portion as opposed to then having to pay it out of your Social Security, out of your business, because if they counted it at the business first, then you'd be paying both Social Security and Medicare for both the employee and employer portion. Okay, so additional, and obviously the tax software helps to calculate this. So the tax software will help. We'll do some scenarios and see how the tax software calculates it in future presentations. So an additional Medicare tax, a 0.9% additional Medicare tax may apply to you if your net earnings from self-employment exceeds one of the following thresholds based on your filing status. Married filing joint, $250,000, or single head of household or qualified widower, and that would be the $200,000. So if your income goes over this threshold for the Medicare side of the tax, they actually not only do not have a cap where you cease paying Medicare, like with the Social Security, but it actually increases, kind of like a progressive tax now. So they added a progressive layer on it, which really complicates things. But you know, it is what it might be a good thing. I'm just saying it adds a level of complication here. So that's going to happen after you go over a certain threshold. Then you got to increase the Medicare side of it by that 0.9%. So here's what the actual Schedule SE looks like. This is the 2020 Schedule SE. So we saw on the Schedule C, we had net income of $100,000. Let's just read through this real quick, and we'll take a look at it in more detail in a future presentation when we actually do this in the tax software. So if you are a minister, member of the religious order or Christian Science practitioner, and you file Form 4361, but you had $400 or more of the earnings from self-employment, check here. So that would be a special rule for minister, member of religious, and so on. So if that applies to you, you're going to want to do some more research on the self-employment. Skip lines 1A and 1B if you use the form optional method in Part 2, see instructions. And then we have the net farm profits, and so we're going to skip down to here. I'm going to skip down to 2 because this is a normal business. Skip line 2 if you use the non-farm optional method in Part 2. So we have 2 here. Net profit or loss from Schedule C. So there's our $100,000 pulling in from the bottom line of the Schedule C. Line 31 and Schedule K1, box 14, code A. So we could have, it could flow through from another entity if it's still subject to self-employment, possibly a partnership or something like that. See instructions for other income to report, or if you are a minister. Okay, so there's our 100,000, and then for A, if line 3 is more than 0, multiply line 3 by 92.35% or 0.9235. So here's the little quirk in the system where they're not really applying, we're reducing basically the income from the Schedule C to 92.35%. So we're taking the Schedule C income, 100,000 times 0.9235 to bring it down to that 92,350 there. Otherwise, enter the amount from line 3. If line 4 is less than 400 and so on. If you elect one or both of the option methods, enter the total of lines 15 and 17. Combine lines 4A and 4B. So there's the 92,350 here. Then 5A, enter your church employees. That's not applicable for us. And then finally on 6, we have add 4C and 5B. So this is basically the income now that we're going to be applying the self-employment tax to. So then we have the maximum amount of combined wages and self-employment earnings subject to Social Security tax, or the 2.6 portion of the 7.65 railroad retirement tax. So that's going to be, the max is the 137.7. So they're saying, hey, that's the max for Social Security. If you go over that amount, then there's going to be differences. It's going to be a little bit more complicated to calculate the tax. And then 8A, the total Social Security wages and tips and railroad retirement compensation if 137.7 or more. Skip lines to 8B through 10. Unreported tips, wages subject to Social Security tax, and then we're adding those items up. 9, subtract line 8D from line 7. If 0 or less, enter 0 here and on line 10, and then go to line 11. So then line 10, multiply the smaller of line 6 or line 9 by the 12.4. So there's going to be the 12.4. That's the Social Security portion. That's the 6.2 times 2. 6.2 being the employee portion times 2 gives you both the employee and employer portion. And then we've got the multiply line 6 by the 2.9. That's the Medicare portion. 1.45 employee times 2 gives us the 0.029 of the 2.9%. So here's basically the Social Security tax and the Medicare tax, which kind of have to be calculated separately because there's a cap on Social Security where there's no cap on Medicare, and Medicare has that added amount if you go over the threshold of like 200,000 or 250,000. So then we have the self-employment tax. We're going to be adding 10 and 11. Enter here and on Schedule 2. So there we have that there. And then line 12. So this is going to be the actual tax then that's going to be added to the tax that's going to be calculated on the 1040 page 2. And then we're going to be able to take half of that tax as a deduction, because if we were comparing this to a Schedule C, like a corporate C corporation employee-employer situation, they would get to deduct half of the self-employment tax. So we get to deduct it too, but we can't deduct it on the Schedule C because that would result in a circle reference to calculate the actual self-employment tax. Therefore, we're going to deduct this half on Schedule 1, Part 2. So this is going to be Part 2, optional method to figure net earnings. I'm not going to go into this in detail. And then we have Part 3, which is applicable to the 2020, and it has to do a little bit with the deferrals or some changes in when the payments are going to be due, with some relief measures that may be in place. So we might go into this in more detail in future presentations, but let's just take a look at it now. Maximum deferral of self-employment tax payments. If line 4C is 0, skip lines 18 and 20 and enter 0. So then we have on line 18, enter the portion of line 3 that can be attributable to March 27, 2020 through December 31st, 2020. So we're going to be picking up the 76503. The software will typically help us out with this calculation. If line 18 is more than 0, multiply line 18 by 92.35. So we're taking that 92.35 percent, lowering it basically by that amount in a similar fashion as we saw on the first calculation here. We saw this calculation here. So then enter the portion. So enter the portion of lines 15 to 17 that can be attributable to March 27th through December 31st. Combine lines 19 to 21. So there's the 7651. And then we've got enter the portion of line 5A that can be attributable to March 27th, 2020 through December 31st, 2020. And then multiply line 22 times that 92.35, add them up. And then we have enter the smaller of line 9 or line 24. And finally, we're going to multiply line 25 by the 6.2, which is like the employee portion of Medicare. And we can enter here and see the instructions for line 12E of Schedule 3. So this then could possibly flow in to Schedule 3, which we'll take a look at. And we'll take a look at that in more detail in our tax software example and kind of hash that out and see what it looks like with regards to the tax software in our future presentation in the next presentation.